What's up, everybody? Let's talk about what happened in the stock market as we go into Labor Day weekend. 3 days off. I hope all of you that are out there don't have to work Monday, but if you do, I know that sometimes happens. For the rest of you, enjoy your 3-day weekend. So here we're looking at upper left-hand corner, September 3rd. This is the E-mini S&P 500 futures for the September 21 contract. So I want you to look at the kind of the upper right-hand corner there, the last yellow rectangle there near the all-time high of 45.49.50, which was today. But you'll notice I have a rectangle around the last 4 days. I mean, look at these rectangles. I mean, look at these candlesticks. A couple days ago, I talked about the two little red dojis, and then the following day was that little green. Basically, you couldn't trade that candlestick. Even that green candlestick wasn't really tradable. And then look at today, another red doji. It's like the four little piggies. You got pigs in a blanket when you go to IHOP and you get your 3 pigs in a blanket breakfast. Well, this is the 4 little piggies. Look at those things. Okay. Now, why am I circling the 4 rectangles? What's the big deal here? Remember, back on August, was it the 30th? I think it was August 30th. I talked about the Big Daddy forecast came back with a really big number. And I said at that time, it was August 30th, 459 from the Big Daddy forecast. I said at that time that that was a significant event that day, and that within 7 trading days, we were going to see a pullback and the price was going to decline. Okay? So far we've had, what's today, 4 trading days since that day? Let me look real quick at the calendar here. Bada boom boom. 1, 2, 3, 4. 4 calendar days. So I said within 7 trading days, we'll see what happens. But I believe that's going to happen. Let's look at left of that rectangle, a little bit to the left, right around like kind of the beginning of August. See those 3 or 4 candlesticks in that rectangle? Right around August 9th. Looks very similar, doesn't it? Look what happened within like a few days after that rectangle. Boom, we had a nice little price decline. Okay, let's go way left, over back in June. Another rectangle there. Look at those candlesticks. They're all little, we got 6 candlesticks there. Basically, 4 of them are dojis, and 2 of them are really small bodies, right? What happened after that? 3, 4 nice down days. Okay? And they happen to also be right near cycle lows, guys. Okay? So I want you to kind of, as you're looking at this today, I want you to kind of put the pieces together, okay? Now look all the way to the far left-hand part of the screen. Back in like late April, early May, you got that rectangle there on the far left. Look at that, same scenario, guys. You got about 6 candlesticks there. And I'd say 1, 2, 3, 4 of them are basically dojis. You got a small little green day, which looks very similar to the other rectangles, right? It's almost identical pattern. Right, you had a red day in there, and then you had another little doji to finish it off. What happens about 4 days after that, 3, 4 days after that? Boom, you get a nice pullback. Okay. So what am I saying? Do I only trade pullbacks? No, of course not. But these are significant events that are much easier to trade. Okay, yeah, you can trade the creepy crawly, slow, watch the paint dry, S&P 500 as it goes up. That's great. There's money to be made there too. Not disputing that. If I see something, a significant day, I'll trade it. Really small days, I'm not going to trade it. I'm not going to trade these little dinky candlesticks. There's just way too much risk. You put it on a position and you're trying to catch it just right, and then you might have to close it out at a small loss or even a big loss if you jump into these positions. Remember, I said in my last video, I think it was, or a couple videos ago, and I'm going to mention it here. It's okay to get into a trend a little late. It's not okay to get into it too early. You follow me? So here we see on the far right now again, near the all-time high of 45.49.50. Now is not exactly the time to take short. You can. You could nibble on 1 or 2 contracts and keep it really, really small, and that's probably okay. In fact, that's what I've done. Okay, took a really small position here just kind of waiting to see what happens. If I have to cut them loose, I will. But for now, I got a small position on, which is more risky, okay, to take on the position before confirmation. You guys all know, guys and gals know how I always say wait for confirmation. We don't have confirmation yet, okay? We do not have confirmation. So this educational purpose only video, I don't give financial advice, just sharing with you guys what I would do, you know. And even though I've taken a very small position here, normally I wouldn't take a position at all, okay? I'd wait for confirmation. What's confirmation? Well, you get a consistent size candle that's red, right? That's going down, that's got some body to it. Not like these little know-nothing dojis. And, of course, momentum would just completely kind of roll over. Right now, momentum is just kind of sitting there, right? It's trying to roll over, but it hasn't. So that would be signs of confirmation. Okay? So we have a very significant pattern here that we've seen multiple times that usually happen before we start moving towards a cycle low. So we'll see if this thing matures in the way that we think it's going to, and price beginning to pull down as we get closer to, even though, you know, I'll put the cycle low in here. I don't have it on here right now talking, but I'll put the cycle low in the date. It's September 20th is that green cycle low coming up on September 20th approximately. Okay. Now, you know, cycle lows don't always happen exactly on the day that's on the charts here. It's just meant to be as a guideline, okay? So we got to be careful. Don't be too dogmatic about cycle lows. They're just a general guideline. Okay, let's look down at the Big Daddy forecast. You know, those two significant events, and the one back there on July 1st also. But the two significant events there that I have rectangles around were both huge numbers. Right? We had a 459 back on August 30th, and we had, I think, a 456 back on August 12th. Okay. So I think we're going to see a nice little pullback. You know, the last pullback that we had right there in the middle of August, I traded that. I made some nice money on that trade. I made it also in July when we had that big July 1st Big Daddy forecast, and within 7 trading days, the stock market pulled back. I made nice money coming down into that, into the low and coming out. Okay, so you really want to maximize when you have significant price movement. So down in these cycle lows, you get just think about it, guys and gals. In 3 or 4 days, you get more price movement than you get in an entire cycle sometimes. All these little days where we're knocking out new highs and etching out a new high by a couple points and a couple points. I'm not saying that's not tradable, because it is for some people. I don't normally trade them, but some people do, and they make good money, and that's great. Okay? But I don't trade here's what I trade, okay? Just give it to you in a nutshell. I trade down into the cycle low, and I trade coming out of the cycle low. It's like a V. As a matter of fact, I'll put it on this screenshot when I put the video out, okay? So what I do, and just sharing with all you guys and gals out there, what I do is, as soon as I get confirmation we're going down, you know, we've got the Big Daddy forecast telling us something's coming. We've got these little doji candlesticks that are beginning to tell us something's going to happen, right? Okay, we can see, if we look at the VIX, you can see the VIX is spiked. Okay, you look at the VIX down there. You got May, you got June, you got July and August. Every one of them had a major spike in the VIX. Okay. And I actually did a video yesterday, and couldn't YouTube and Google, who owns YouTube and their infinite wisdom, wouldn't release the video. But I won't even get into that. You gotta love YouTube and their craziness. It's that video, which was about predictive trading. I was going to share that with everybody. Predictive trading. Maybe I'll get a chance and figure out a way to get that video out there. I will. But YouTube it's basically got that video sitting in. We're checking it. It's like one of the steps they do. Okay, when you put up a video. Who knows? 2 days later, I'm still waiting for them to check it. Yeah, I'll hold my breath on that one. But anyway, back to this video. You got everything pointing towards another pullback coming up here. Now, it could be the start of the big crash that I think is still going to happen during this fall, this winter. Maybe not. I don't know. But either way, it's going to be tradable. Okay? And yes, I still think we're going to have a big, significant price decline in fall, winter. Maybe even as late as January. Okay, that's kind of the area I think we're going to see a big price decline. So that's what I'm seeing, guys. These 4 little candlesticks, most of them 3 out of the 4 dojis, is exactly what we've seen, going back the last 3.5 months. It's the same exact scenario. Okay, so I think we're going to see the same thing again. I've got a very, very small position on the short side here. I'm going to wait this thing out. If the price really moves against me, of course, I'm going to have my stop loss. I'm going to cut it loose and move on. But for right now, I'm keeping the position really small. I haven't had any positions that have closed, so I don't have any profit loss to share. But I do have a pretty significant position in the euro-dollar futures. So when I close that, I'll share that with everybody. Right now, it's trading at a little bit of a loss, so I'm waiting to see what that's going to do. I also have a pretty sizable position in wheat futures, and that's starting to look pretty good. It's trading at a loss right now too, but I haven't closed anything. So as soon as they close, whether it's a profit or a loss, I'll share it with you guys. Because on this channel, guys, I keep it real. I don't just show just profits. If I take losses, I'm going to show you, okay? So far, though, those positions are just sitting there, and when the time comes and I got to close them, I'll share it with you. What else I wanted to cover? I want to cover one other thing, and it was about predictive trading, because the other video I put up, they may or may not release it. So I'm just going to cover something real quick, so just hang with me on this. I know a lot of people in the comment section have asked about, the Big Daddy forecast and predictive trading, and can I share some things about, forecasting and predictive trading? Well, the Big Daddy forecast, of course, is an algorithm I wrote, okay? And, that's something that I probably wouldn't share publicly, and I can just have everybody beginning to cry and weep. But I'm going to give you something today that's going to really help you out for you guys and gals that want a measure of predictive or forecasting. Okay? And what we're going to look at today, guys, real quick here is the VIX. And yes, the VIX can be used in a predictive manner. It all depends on how you view it. Okay? I'm going to give you the little cherry on the top, okay? On the top of the dessert. And I'm going to tell you how if I didn't have the Big Daddy forecast and I didn't have my own algorithm, in fact, I still do this, even though I have the Big Daddy forecast, I still consult the VIX. As you can see, it's in the screenshot. I keep it there because I look at it, okay? So now I'm going to give you a little clue on how you can use the VIX to predict what's going to happen in the S&P 500, okay? So I'll put circles on this, and hopefully YouTube won't prevent it from being published. Gosh, So look way back there on the VIX, right down near the bottom, and you're looking at the VIX indicator. Look all the way back to the left, right around May 10th. You see that big dip right there in the VIX, and it goes down? Well, whenever you see that, guys, that usually means price is going to go up, because that's what the VIX does. It moves opposite of pricing. Okay? And then you'll notice that you begin to see this spike in the VIX. Right? The VIX starts to spike up. You see it starts to ramp up. Okay? Well, guess what? You can short as that ramp is occurring. Okay? As the ramp starts to occur, you can short that. You short it right there. And remember what I said earlier, it's better to be late than too early in a trend. Now, you don't want to be super late. If you catch the second day, the second candlestick, if we look up at we're staying with May 10th now, if we go up and look at those candlesticks on that cycle low, you'll see there's 3 nice candlesticks there, right? 3 red candlesticks. If you catch that second day candlestick, the red candlestick, that's fine. You're still going to make a really good money. Okay? So if you want something predictive on the short side, when you see that dip, a low in the VIX, like you get a dip, it like dips down. And then right after that, you see a ramp up. That's an opportunity to short the S&P 500 on the futures contracts, okay? That's your opportunity right there. Now, I can hear some of you saying, well, I can't short, or I don't have an account to do that, or my account is a cash account only, okay? Or for other reason, I can't short. So you can only do long side trades. Okay, so here's what you're going to do for your long side only traders, okay? What you're going to do is, as the VIX comes off that peak, again, we're looking at the VIX right around May 10th. As the peak starts to wane and you get that sharp downward movement, as soon as it starts to come down, you can take a long position. Okay? And you'll see the momentum sometimes on the stochastic momentum index will be trying to cross over. Okay, how soon you decide to take a long position on that downward slope in the VIX has a lot to do with how aggressive you're going to be. If you do it right away, you might get caught out a little. You're getting into position maybe a little too early, and the market could still be moving down. If you want to do it a little bit later, then you'll probably almost always get some profitability out of it because you're going to get better confirmation. You follow me? So what am I really saying in a nutshell? The VIX is going to give you indications of how you can trade both sides, guys and gals. You can trade the short side and the long side. You literally short it, make your money, and as soon as the VIX starts working back the other way or working down, you take a long position and you make money there. That's where I make most of my money, guys. I make most of my money coming in and out of cycle lows because that's where the biggest price movement is. And that's where the largest or greatest probability of accurate prediction is. Okay? It's not so much about cycles, even though the cycles are helpful. Because cycles are also predictive. So the Big Daddy forecast is predictive, but so are the cycles. They're predicting a low. So just think about that. If you have to pause the video, go ahead and do it. And think about it. If you know that you're going to get a cycle low, that's really valuable information, right? And again, I'm going to repeat one other thing I've talked about before. Don't get hung up on price. Forget about price. Get that stuff out of your head. Well, how do I know how much higher it's going to go? How do I know how much lower it's going to go? Forget it. Forget price. Just remove it from your mind. Just trade. Just trade the confirmation. Just trade it. You see the price is going down. The VIX is confirming it. The stochastic momentum index is confirming the price is moving down. You've got your confirmation. Trade it. Don't worry about price. As soon as your position turns profitable, lock it in with your trailing stop. If it's not profitable yet, make sure you have a stop loss in place and keep it, kind of tight. If your timing's bad, oh well, your stop loss is going to save you from a big loss. You can re-enter again maybe when your timing's a little better or as you get better and better and your skills get better, okay? Now just look at May 10th down to VIX. Go back to the VIX here. May 10th, you see a big spike. Right around June 14th, you see another big spike. Right around July 19th, you see a spike. August 16th, 18th, whatever, right around there, you get another spike. Look at the VIX. You got 4 significant spikes. Okay, we don't want to mess around with them little tiny spikes. We're talking about the big ones that you see here. 4 of them. They stand out. I got them circled. Okay? If all you ever did was just trade those spikes, they're going down in price is going to go down as the VIX spikes. And as the VIX comes down, the price is going to go back up. If all you did is trade these 4 spikes on the VIX in the last 3.5 months, maybe 4 months, you would have made money every time. Think about it. 4 trades in 4 months. A trade a month. Some of you that might be $100. For some of you that might be $500. Others might be $1,000. Whatever it is, $5,000. Right? Every account's different. Everybody's making different levels of money. But just think about it. Would you be a happy camper right now if you knew you had 1 or 4 successful trades? 1 trade a month. That's all you did. That's pretty cool, right? It's predictable. I'm not telling you you're going to get this every month. I'm telling you the VIX is showing it. The VIX is showing you opportunity. Capitalize on it. Refrain from trading too much. People trade too much, and that's why they lose a lot of money. Okay? Now, some of you know what I'm going to say. I'm going to say it again. Keep it small. Get good at being profitable on a consistent basis with really small positions. Then maybe you can think about going big or at least medium. Okay, I almost always start small, guys. I almost always start with a small position. Okay, so there's your predictive approach to how you can make money even without the Big Daddy forecast. You can do it with the VIX. You can short it on the way up and you can long it on the way down. Just make sure that spike is pretty good. Okay, and you're going to know that because you're going to compare it to the VIX before and after, right? You're going to see it starting to spike up. Some of you now know about cycle analysis. Look at those green arcs at the top in the pricing area where the candlesticks are. Okay? It should be obvious that there's cycle lows there. You can see them, right? The green arcs, you can see right where the 2 arcs meet, the price came down. Okay? So make use of the VIX, guys and gals. You're going to make a lot of money if you use the VIX as a predictive indicator. Yes, it's predictive in nature. You can use your cycles to help you kind of zero in a little bit on when you think you're going to be a cycle low. And just for the record, we don't always get lows. The price doesn't always come down just because there's going to be a cycle low. Sometimes it doesn't happen. They're just meant to be guidelines, so don't be too dogmatic, okay? Wait for the confirmation, take a small position. If it turns profitable, you can add to your position, lock in your profits at the trailing stop. If you're not profitable yet, put your stop loss in place. Make sure it's kind of tight. If it hits it, don't worry about it. Small losses happen. Move on to the next trade. That's it, guys and gals, for today. I hope you enjoyed the video. Make sure you subscribe to my YouTube channel. I really appreciate that. And a thumbs up as well. Click the little bell to be notified as the videos as I put them out. We'll talk to you all real soon. Again, next time.